9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with Avril Hong in Singapore.
And we're counting down to the open of the Greater China markets. Our top stories: oil prices jump after President Trump makes fresh threats against Iran, even as talks get underway on the permanent reopening of the Strait of Hormuz. The open in Greater China in focus, with traders returning from a holiday. The broad equities gauge at risk of falling into bear market territory. Also on the program, Bloomberg learns UK Prime Minister Keir Starmer could resign as soon as Monday, paving the way for the country's seventh leader in a decade. And we hear from Chinese Olympic gold medalist Eileen Gu about her brand partnerships and her future beyond skiing. That exclusive conversation coming up.
Happy Monday. Hope you had a good weekend. We start off the show, of course, with some breaking news here when it comes to the loan prime rate in China. So as expected, unchanged for both the 1 year and the 5 years. So 1 year holds at 3%, 3.5% for the 5 year here this morning. No surprises because the data really, when you talk about the AI boom and what we've been seeing in exports, according to Bloomberg Economics, is suggesting that maybe that doesn't show there's less urgency for them to actually policymakers to support the economy. So there you go. Unchanged at the moment. So certainly we have that out of the way. We're watching, of course, this reopen in China. There has been a lot of interesting, I guess, confusing sort of signals that came through over the weekend with those talks in Switzerland between the U.S. and Iran. But then again, we continue to see Asian equities doing quite well here today.
Yeah, I think they're benefiting in a way from the so-called peace dividend, right, Yvonne, after these talks got underway between the U.S. and Iran, despite a bit of confusion in the initial stages, given Trump threatening these fresh strikes, and then Iranian media also talking about on the weekend how the talks were perhaps stalled. We're since hearing also with the Iran-U.S. talks and the Qataris now issuing a joint statement along with Pakistan, talking about how the first session of the U.S.-Iran high-level talks have concluded. And as we watch that, we are also seeing Brent perhaps a bit above the 80 handle, maybe a bit of a reversal from what we saw last week, right? But I think what's also really interesting has been the repricing that's underway on the front end of the curve. Remember, we did get the holiday on Friday out of the U.S., so this is their chance to sort of catch through as well a bit more of what Kevin Walsh had been signaling to the markets. Now, in terms of what we're hearing from the Qataris as well, they're talking about the communication lines that have been formed to avoid the mishaps in the strait. And of course, I think both sides, the signals we've been getting from both U.S. and perhaps to some extent Iran, has been that the priority is to keep the strait open, let the oil flow in a way. Take a look at what we're seeing in stocks in terms of S&P 500 futures as well, and the trading action that we are expecting today. Really, you're seeing that peace dividend, I guess, including in Taiwan, that is back from a long weekend. You're up about 2%. But don't forget, of course, this week we have a couple of other things on deck, including the Micron earnings that will inform perhaps the pricing power, the AI trade as well. Talking as well about what we're seeing in the Greater China markets in terms of Hong Kong and mainland China. Of course, we are flip the board on bear market watch on the MSCI China against the backdrop of the TAC 8 really languishing here, especially after last week's weak retail sales print out of China. Aside from that, we're watching, the extent in which China's A shares sort of play a bit of support in that respect. Dollar China holding at that 678 level. Of course, the lines we're getting in from Qatar, it looks like deconflicting things seems to be the priority. Hearing there also about some comments over Lebanon. Yvonne?
Deconfliction. Yes, that's the name, the word of the day. We're going to get some more lines here. Breaking news when it comes to China. So they have added now some U.S. firms to its export control list, one of which is USA Rare Earths Incorporated, to that list. We're still kind of go through, but it's a total of 46 U.S. firms now, where China does ban the government purchase from 46 U.S. firms. They've also added the likes of Aviox, Red Cat Holdings to that export control list as well. Interestingly, the rare earth company there, this is on the back of what we heard from G7, right? When we heard from a lot of these countries aiming to reduce their dependence on China when it comes to rare earths, with that target, of course, of no more than 60%. So interesting how that kind of affects the geopolitical sort of trade winds, mind you, as well. So certainly that's one thing to focus on. Avril, you're watching a little bit more on some of the lines coming through from the Qataris over, of course, these U.S.-Iran talks.
Yeah, and I think our team is paying close attention to this as well. For more, let's bring in Steven Stepshinsky, who leads our Asia Energy coverage, and John Herskovitz. John, let's start with you first. I mean, we're seeing these lines coming in from the Qataris, fast and furious. I think it is supporting some optimism that we're seeing some stability on the strait, or at least both sides are, working in that direction. I wonder, where do things stand on the talks now? What is your assessment of the progress that's been made?
Sure. I mean, the talks have gotten off, and the acrimony between the two sides is apparent. J.D. Vance cited some progress being made, but we had the symbolic show by the Iranians of staying away for a bit after Trump made threats concerning the Strait of Hormuz. So they're underway at the high level with the mediators in there, but the key is going to be these technical talks. There are a lot of elements that need to be worked out in a very short time frame of this 60-day period. So we have the official talks going on, and these technical talks are really going to be the key to the progress in the deal. But they're underway, the acrimony was on display, and it remains to be seen where things will go from here.
There's still a lot of questions about the Lebanon aspect. I mean, that's kind of what President Trump was saying on the weekend here on where these threats started. I mean, where do things stand when it comes to Israel now?
Exactly. As Lebanon is a key issue in this. For the opening session, Iran made this a point that they want to see the ceasefire going on in southern Lebanon. For Israel, this is a major setback for the Netanyahu administration. They have made the southern Lebanon as a key security concern and have indicated that they're going to keep troops there. So how this plays out is going to be one of the major aspects for this. It was the top of Iran's agenda today when the talks began. The U.S. was focusing much more on the Strait of Hormuz, but how this issue settles out is one of the things that's going to really determine the future of these negotiations.
Stephen, let's bring you in. What do you make of what we're hearing so far? Because over the weekend, we're also hearing how oil has somehow, some of it, gotten through.
Yeah, so I mean, I think that there was a lot of fear coming into today that, you saw the statements over the weekend from Iranian media saying that Hormuz is shut. You saw clearly Trump making some messages on Truth Social that was, worry people in the market that potentially there's escalation of conflict between the U.S. and Iran. But clearly this Qatari statement is throwing a bit of cold water on those fears. I think, the fact that these negotiations are continuing is a bearish signal for the market. And you're seeing Brent now down about 0.5%. And WTI up just about 0.5%. So it's kind of pairing some of those earlier gains in the day. I think, you also look at the flow of oil. While there is oil getting through, it's unclear exactly how much. Bloomberg has counted about 8 million barrels of oil has gotten through the Strait of Hormuz over the last 2 days, Saturday and Sunday. That compares to 20 million tons per day, 20 million barrels per day before the war began. That's very different than Hormuz saying it's shut, right? You're still getting some oil out. But at the same time, the U.S. has said that there was 17 million barrels that got through. So we're really sitting somewhere in between. It's interesting that we have these dueling narratives. But the fact that Qatar says that these talks are ongoing, that they didn't break through, is going to be something that will pull prices down lower likely.
The other thing is also how there seems to be separate corridors that are formed, right? Northern, closer to Iran, and the U.S. safe corridor. How are things playing out there?
Yeah, so we are seeing on the Omani side, because the Strait of Hormuz has two sort of corridors. And on the Omani side, we are seeing oil vessels likely going through either dark. But at the same time, you're also seeing Iranian vessels getting out as well. So the Iranian side says, they're likely getting their waivers. Companies are able to import and countries are able to import this without the fear of sanctions. That was part of the MOU agreement that was made last week. So not only do you have a pretty steady flow going through on the Oman side, but you also have the Iranian barrels getting out as well. So that, again, is adding more supply and adding some reassurances to the market that surely the oil is getting out. We're not in the situation we were like in, a month ago or even in March, where there was really nothing flowing and there was fear of this kind of spiraling into a wider conflict through the region that was result in refineries, offshore platforms, or terminals being hit in counterattacks or attacks. Right now, it does seem that this peace MOU is holding up, and we are getting a bit of oil out. Is it back to normal? No, but there are some hopes there in the market.
Steph, I'm going to ask you about China, right? There's been a lot of debate about what's been going on with oil imports to China and the fact that they've declined. Some even say mysteriously. That's really kind of helped the energy markets kind of weather through the last 3 months or so. What happens if that demand starts picking up again?
Yeah, I think that's the big question. Not only, so the first one is obviously Hormuz. The second question is, what does China do? The fact that Chinese imports had dropped so much in the last month or so had helped to balance the market. Even though the oil wasn't getting out, a lot of it wasn't getting out, China taking less of it helped so that rival importers could get what they needed. Now, going forward, will Chinese imports increase? That's the big question. That's what my colleagues here in Singapore are asking their sources about. At the moment, there isn't an immediate indication that China is buying up the market on this dip. It doesn't look like we're going to see an immediate knee-jerk reaction where the imports do rise. But there is a big question about how much inventories did the Chinese use during this period. Did they use inventories, or were they able to just reduce their demand? I think that is also part of the big question that the market is trying to figure out, because we don't have a clear view exactly on how much oil is left in China's strategic reserves. And at the same time, it's really unclear how much they were able to actually reduce their oil consumption through lower demand. So let's say, for example, they do need to refill. Well, oil at $80 compared to $120 in March looks like a pretty good deal, right? So perhaps you see the Chinese go in to buy. Maybe they wait for prices to fall more. But at least at this moment right now, we're not seeing an indication that the Chinese are really rushing to come back.
John, just one final quick question before we have to let the team go. When you look at the talks perhaps continuing on for the rest of this week as well, first round concluded, what else are you watching? Potential for things to scupper the progress that's been made so far.
Yeah, there's so many contentious issues out there, from Iran's nuclear program. Remember with the deal that was reached under the Obama administration, it took about 2 years to get a deal just on the nuclear program. And we're looking at a lot of other things as well, from sanctions relief, unfreezing funds, how to keep Hormuz open, the ending of the U.S. blockade of Iranian ports, sequencing of all these events, the rewards for specific steps. The technical issues are big, from nuclear to Hezbollah in Lebanon and Israel. There's just a lot that needs to be negotiated in a very short time, and a lot that can go wrong if various steps don't go according to procedure. So keeping an eye on these big issues and the technical talks is going to be something that really needs to be a focus as we go forward.
John and Steph, thank you. That was our team there, Bloomberg's John Herskovitz and Stephen Sapchinsky, of course, on all things around an oil here. Just want to recap those lines that came through in just the last couple of seconds here from the Qataris and where these talks stand right now. So first session and those high-level talks have concluded, there is a mechanism that's been created here for further technical talks. So the communication lines have also been formed when it comes to the Strait of Hormuz and really avoiding mishaps around that key waterway. So technical talks to continue for the remainder of the week for now. They also talk about this agreeing to a deconfliction cell over Lebanon here at the moment. That continues to be, of course, that's a sore point here. And also, this is according to the Qataris as well as the Pakistanis, who have also issued that statement in regards to where talks stand right now. Of course, we're counting down the open and the reopen of trade in Shanghai, Shenzhen, and Hong Kong. Of course, it's a big one after the Dragon Boat holiday. We continue to watch as, the skies have cleared this weekend as well. It continues on this Monday morning. This is The China Show.
All right, coming into today, of course, we're watching the reopen of Greater China markets. And one thing I think traders across the region might be paying attention to is this red hot that, of course, has crossed the terminal from the Qataris on the back of this negotiations underway between the US and Iran. The Qataris saying that the technical talks will continue for the rest of the week. And, of course, this is following on from them saying that the first round of negotiations have ended. Aside from the reopening that we're watching today, potentially also in MSCI China, we are seeing it in near bear market territory as the Tech 8, the Chinese tech names have been coming under pressure following on from retail sales last week. We're also watching out for a couple of other things, including the South Korean Prime Minister in China this week on the sidelines of WEF and Macau visitor arrivals, another thing to watch. And along with all that, we have a couple of CGB sales. I think it's the 3 and the 10-year additional sales as well. Yvonne?
Yep, a lot on tap for at least today. I mean, even the week ahead here, you have, of course, U.S. PCE inflation. You have Micron earnings, as you mentioned, as well. So some Fed speakers also going to be talking, I think Williams and Waller as well, after, of course, that Kevin Warsh's first FOMC meeting. We're also checking oil because I think on the back of some of those Qatari lines that you mentioned, Avril, we have seen actually oil markets cool down. In fact, I think Brent is back below $80 here once again. And really, that's helping really fuel the risk asset side of things here in Asia. Take a look at how tech is doing, right? And really, we continue to see those usual suspects, like of SK Hynix is up some 5% as well. But even the likes of Murata Manufacturing, Renesas, ASE Tech are all doing quite well. As Hong Kong, what's going to happen in the reopen here after that long weekend? The AI trade is going to be in full focus after the Chinese markets flirted with that bear market. Meanwhile, we're watching fixed income in China as well as an ocean of stability. Let's bring in Anthony Stevens, our markets reporter. Let's start with the tech side of things. What's driving that here today?
Yeah, I think we're going to have more of the same in China, right? Going by the leads that we're seeing in Korea and Taiwan, you're going to see hardware continue to do better than software. And for China, that is a mega trend. You have the Chinese really leaning into their hardware prowess. And again, we have headlines about AI stimulus program pushing further build out of computer data centers and so on. And that's helping some of the Taiwanese suppliers to China. So it stands to reason that the supply chain in China will be quite strong. On the consumption side, we just do not see any data point of an improvement in consumer confidence, right? You saw kind of Dragon Boat Festival spending just unchanged on the year, despite all this like boom town in tech. So it's really not filtering out to the broader economy like it's been doing in Korea and Taiwan. So I think software and kind of consumption plays will continue to struggle. And it's important to mention that this China bear market, that's actually what is happening. It's only these tech 8 that are dragging this market so badly. If you think about the Chinese banks, they're at 52-week highs. If you think about Chinese EVs, they're kind of up on the year. So it's really the negativity in this software consumption space that is dragging the market down.
Anthony, what about the rest of EM Asia? Because we are seeing signs that it's not just about tech or AI. Other sectors also seem to be showing a bit more promise as far as earnings, profits are concerned.
Yeah, it actually started from tech as the tech rally kind of broadened out into materials, into construction, into property in some cases in ASEAN, for example, or in Thailand. So it started with tech, and it's basically a broad-based economic boom. China obviously is the exception because it's digesting this property market downturn and a slowdown in consumption. But now in terms of the broadening, you do need this oil price to settle down for Asian consumers to feel confident. There's a lot of EM consumption stories in India, in Indonesia, in ASEAN generally, and also in Africa. Part of the EM rally at a headline level was also the Latin American countries benefiting from supply chain realignment. So there's a few megatrends going on here that help EM stocks, but this situation in Iran really does need to cool down for EM in aggregate to keep rallying.
All right, Anthony, thank you so much. Bloomberg's markets reporter, Anthony Stevens, and we'll continue tracking how markets reopen today on the Greater China front. Playing more ahead, this is Bloomberg.
All right, more Iran lines to tell you about here. We're hearing now from the Iranians on how these talks progressed over the weekend. And this is according to the foreign minister, Abbas Araghchi, posting on X. So he mentions here when it came to oil and petrochemical exports are waived. Also, he mentioned that some frozen assets have been released. And when it comes to the reconstruction and development plan, that has been launched for Iran, according to Araghchi here. So mediation delivered major progress to end the Lebanon war. So these should be pretty positive headlines crossing through here when we talk about, of course, what came out of these talks and what's going to be happening in the next 60 days or so. The big thing everyone was kind of really questioning was about the financial incentives and really what we've been seeing here, the development plan for Iran worth at least $300 billion. So according to Araghchi, that plan has been launched for Iran right now. That should continue to see oil markets cool, right? You're seeing there we're back below $80 when it comes to Brent here. We're watching, when it comes to risk assets, the Kospi continues to rise more than 2% here this morning as well. So there you go, $75 for WTI as well. So it seems like what we heard from the Qataris just the last couple of minutes as well, that the mechanisms are in place to continue these talks, and the technical talks will continue for the remainder of the week as well. I think that's enough for traders to look at this and see, look, we're continuing to see some pretty positive vibes here.
Yeah, positive vibes, and in the sense of how does that inform the sort of trading we're going to see in the Greater China markets today, right? Because you did get the sense that with the Iran peace deal, of course, this was developments early last week, that the likes of South Korea, Taiwan were really benefiting. Maybe that sapped a bit of demand from Chinese equities overall. So, the way in which we're seeing a bit of pressure coming for the Hang Seng and the Hang Seng Tech, of course, also through the lens, in a way, of this AI consumption plan. That will be another thing that we're watching for the session as well. There has been a bit of a reversal for the bearish dollar narrative. So we're watching that in terms of dollar China as well. And these are some of the other names that will be in focus, the energy-related stocks, as we see oil following on from an earlier spike early in the session, reversing towards 80 now. Lots more ahead. We'll continue tracking these Iran developments. This is Bloomberg. Welcome back. You're watching The China Show. We're counting down to the open of markets, and Yvonne, it's really the focus that has shifted now as we watch out for what's been coming out from the US-Iran talks in Switzerland, hearing from the Qataris, talking about how technical talks will continue for the rest of the week. They seem to also be trying to agree on deconfliction in a way over Lebanon, and Abbas Araghchi, the Iranian foreign minister, also talking about how oil exports have been waived, the blockade has been lifted, and some of the frozen assets released. So overall, signs of major progress following these talks, Yvonne.
Yes, I mean, the confusion of the weekend was, of course, what we heard from Trump, right? Threatening here when it came to what was going on with Hezbollah and Lebanon. And now that we're hearing the likes of the foreign minister of Iran saying that talks deliver major progress to end the war in Lebanon, I think that should be a clear signal for today, at least, that things are progressing in a meaningful way. So that in itself is allowing for risk assets to return on this Monday morning on a positive side of things. CSI 300 onshore markets are coming back from that holiday as well. Slightly moderately higher here this morning, and you are seeing the likes of Chinex. We'll see how that tech trade goes for Shenzhen here, but we're up about 0.5% first and foremost. Shanghai crude is following the oil price slightly higher here today, although we have in the last few minutes or so really snapped out of the last few sessions of gains when it comes to oil markets, just given some of the headlines that we are digesting here this morning. So we'll see how this all plays out. But still, when it comes to onshore markets, as Anthony mentioned, right, some of these consumer consumption names are not doing quite well. Look at Medea Group, we're down 1%. We did get some Dragon Boat Festival sort of data coming through here. Not much really improvement here when it comes to the consumption side of things during that 3-day holiday. So that maybe not be helping the consumer side. And even when it comes to the software side as well, because the Tech 8, as he says, in Hong Kong has really kind of dragged offshore markets to the downside. We see that once again here today. HS Tech is lower by 1.5%. We're still on bear market watch for MSCI China here right now. 70.43. If we continue on this trajectory, we might get there here today. We'll see. But you are seeing some pretty big moves when it comes to Baidu down some 2%. Meituan, Tencent, Alibaba's down some 3% this morning. We'll see how Zhipu pairs in just a bit here. But we're watching some of these oil names first and foremost, just given the cooling. This geopolitical risk premium seems to diminish when it comes to oil markets. And that certainly is leading to some of the oil companies in China to head lower here. CNOOC is heading the opposite direction. We're up 1%. And we're watching some of the brokerages as well here today. Certainly this is what they're doing right now. If we can flash that board, guys. There you go. Most are higher here. This is after what we heard from Paul Chan speaking to China Daily. Some reports saying that Hong Kong is seeking more investment quotas and IPO access for mainland investors. This, of course, against that backdrop of course, China cracking down on some of these illicit stock trading from mainland investors. Zhipu's doing this, right? I mean, last session, another 20% gains. We're seeing another 13% here today. It's going to be pretty interesting here, just given this new language model. It really continues to show that it is one of the maybe leading sort of models out there, even globally, according to some reports. So we'll track this one once again with Robert Lee and Bloomberg Intelligence here on what's really driving Zhipu here today. Could be seeing another Zhipu Minimax pair trade continue to those two to head into opposite directions. Rare earths, that's one thing to watch here. So the U.S. Firms have been added to this export control list from China. This is on the back of what the U.S. did, which basically was adding some firms as well just a few weeks ago on national security risks as well. So we're watching rare earths in particular here, some of which are lower, but it's a mixed bag here today. So there's a lot to really kind of digest here this morning. Let's get to our next guest. Cusson Leung is CIO of KGI International Wealth Management. He joins us here.
Morning.
I take a look at what's been going on in Iran. I mean, oil seems to be continuing to fade, some of the risk premium around that. Can I continue to look at risk assets without worrying about inflation anymore, or what do you think?
I think in the very, very short term, potentially yes. But we all know that even now we are in moving into the so-called MOU phases over the next 60 days. But anything potentially could happen over the next 60 days. There could be a deal or there could be no deal. So in the very short term, yes, there would be positive sentiment to drive the market still going higher or oil price lower. But do expect some more volatility to come back to haunt the market probably over the next 60 days.
I know you've been focusing on mainland China and Hong Kong, which you could say they've been outshined by the rest of Asia, given just the bifurcation we're seeing around the AI story here right now. What's the outlook for the rest of the year?
No, I think right now a lot of the underperformance, so-called, for Hong Kong China market was driven by the dispersion of the focus on the AI supply chain, where the rest of Asia, for example, Taiwan, Korea, Japan, a lot of that was mainly focusing on the hardware side, on the upstream of the AI supply chain. While in China, a lot was driven by the downstream, more on the application for the AI supply chain. And as a result, as the market is quite short-term for the time being, everyone just focusing on is the immediate earnings impact. We know that AI, the upstream of the AI supply chain will be much more immediate in terms of reflecting the earnings in the upcoming quarterly earnings. For the downstream, that could potentially take more long term. Therefore, I think that indirectly is reflecting the market that the willingness to look more long term is not really there.
Cusson, as we speak, we're hearing how MSCI China has fallen, 1.5%, so it's on track to enter a bear market. You talked about the maybe short-term lens that investors might be viewing AI in terms of, maybe focusing more on how they can monetize things. But what do you think is the end game here and the extent in which maybe there needs to be more of a focus on how maybe the adoption of AI is a bit different from, at the end of the day, the AI advancement as a goal, per se?
I think the overall direction of China AI development will not be derailed by the short-term underperformance of the market. I think fundamentally, the difference between the Western AI development model and the China development model is very different. I think on the West, a lot of that was focusing on the hardware side, on the model side, on the technology side. I think a very good example of that development, the cap of that will not be mainly on hardware or the model. The cap of the Western development of AI will mainly be on the social contract. For a big tech company, they can fire the entire workforce or majority of the workforce overnight, but they won't do that, mainly because of the social contract and potential government intervention. Now, if you look into the East, in China, I think right from the very beginning, the involvement of the government in the AI development direction is very early. I think in China, the model is how to integrate the AI model into the ecosystem, how to help the existing business to improve margin and improve efficiency. And therefore, the social impact will be much less. So you can argue that the visibility and the certainty of the China AI development model is actually much higher. And just because of the short-term market underperformance, I don't think the Chinese will be changing this business model.
So in terms of the beneficiaries then, I mean, you said you still favor some of these downstream AI names right now. What are going to be those potential winners?
No, I think very similar to the last boom of the internet bubble. Who developed internet? Some may know, some forget, but the company is not there. Who make most of the money from internet? Those who use the best use of internet make the most money out of that. I think similar in China, a lot of big internet giants, they have a huge ecosystem and they are incorporating the AI model into the existing business. That will prove them to be the ultimate winner in this AI race.
Cusson, aside from AI, I wonder what is your assessment of risk, per se, in the back half of the year? I mean, we're watching and trying to decipher what the Fed is going to do, so rate trajectory is on the cards. But aside from that, also trade negotiations between the US and China, how that might pick up. How are you positioning or advising clients?
Yeah, I think I would like to divide that question into two parts. I think in terms of the short-term risk, the one and the largest risk is that because of the underperformance of the Hong Kong-China market, and that potentially, and together on the backdrop that the rest of Asia is doing quite well, what we're afraid would be a vicious cycle where capital start to flow out of Hong Kong, China, and then that vicious cycle just keep the market moving down. Just like post-COVID, we have a couple of years where investors try to avoid the market. But I think this time there could be two main differences. One is on the development side. Ever since China announced the DeepSeek model, I think the development of the technology and the model just keep going on. I think that is one main catalyst for the market. We don't know when, but as far as there is the announcement of that new technology breakthrough, that will be a big catalyst for the market. And therefore, I think that will prevent money from shorting long-term on the market. Secondly, I think very different from a couple of years back, there is huge amount of IPO into the market. And that will keep the global investor focus into the Hong Kong, China market. Although short-term, there's lack of catalyst.
I want you to put your old property hat on.
Yeah.
And tell me about Hong Kong property. I mean, part of that whole IPOs and, is really kind of driving a lot of the real estate market to come back. How real is it, this recovery, you think, this time around?
I think this is much realer than the last 15 years when I look at the Hong Kong property market. I think this time around, this is not driven by liquidity. That was not driven by speculation. That was purely driven by population in Hong Kong increasing, and there is demand for housing, and that drives the rental yield to increase to surpass the mortgage rate. I think that looks to be much more solid than all the past upcycle I have seen.
Very promising. Cusson, thank you. It's great to have you. Cusson Leung, their CIO of KGI International Wealth Management, joining us here in our Hong Kong studios. Coming up, investors now bracing for a Super El Nino weather pattern to drive temperatures higher in many parts of the world. Yeah, we've certainly been feeling temperatures go north this weekend. We got a stock picker's guide to how to navigate all that next. This is Bloomberg. All right, checking the weather here. It's very hot. There's a weather warning that's going on in effect in Hong Kong today. I think we were talking about 30 degrees or so, but it certainly does feel that way. We were complaining about the rain for weeks now, and now everyone's complaining about the heat. Once again, Avril, what's new? But yeah, that certainly does lead to a lot of questions about what the weather is and how it's really impacting markets, because we got to talk about this kind of threat now of a Super El Nino weather system.
Yeah, complaining about the weather seems to be an Asian pastime, but, when we watch out for the Super El Nino weather system, that also maybe has some investing implications, right? Because that weather system could be one we see as we head into next year and maybe complicate the outlook for central banks as well, given maybe what this means for crops, food prices, food inflation. Here to talk us through all this, senior Asia equities reporter Abhishek Vishnu joins us now. So, Abhi, we've been warned about this Super El Nino for a couple of months now. It seems to be gaining steam. I mean, how does that affect stocks investing?
Well, in the context of where markets are, you've got an Iran war where risks are sort of receding, but on the other hand, you've got inflation and higher interest rates going into the equation. So this weather pattern actually turbocharges that. From a top-down perspective, it feeds into the higher inflation narrative, higher interest rates narrative, and that's where it starts impacting growth stocks, impacting, big members, a variety of indexes. But on the bottom-up side, this is supposed to be the hottest year on record. So 2027 can go that way as well. And then this pattern, weather pattern in the past, when it has been normal, has actually erased about 7.8 trillion in productivity in 2015, 2016. Now, think about the context with which it's coming. There is about a 63% chance of a super event, a Super El Nino, which essentially means, more rainfall, excessive floods in some parts of the world, and a lot of drought in the other parts of the world. So from the bottom up side, it weighs on the agriculture yields. It helps agriculture product makers. It disturbs the equation in terms of the heat levels, the energy demand, so power producers gain. And then you have, fishing industry, which might also suffer because of its consequences. So there are a variety of industries which are getting impacted because of this. And it starts showing up in a gamut of industries, but it's not that simple to trade. At the headline level, it can be, but when you look stock specific, it all depends on, let's say, which company has decent inventory, which doesn't, which company is present in both cycles of, let's say, sugar market, in India and Brazil, that may benefit. But, companies with low inventories or, just looking at one cycle may see crop yields deteriorating, at least this year.
What about geographically? How do you see the markets then panning out?
So geographically, I mean, the impact would be very much like Iran war, but in context, like, think about poorer nations, lower per capita GDP, those who don't have reserves, buffer, and are energy import dependent. So those countries would be suffering a bit more than others. But again, at the headline level, it goes through the interest rates, inflation, and that's why it feeds into tech stocks and growth stocks. It can become a risk, but the stock-specific opportunities here are very much related to agriculture, horticulture, etc. Like, fishing industry in Peru has been disturbed. It has come to a halt. So there might be a lot of losers there. There are companies in India which are present in both sugar cycles of the world, so that may benefit, but there are a lot of companies in India which are not, so they are losers there. And then, of course, the energy demand, I mean, that will remain constant across the board. It is supposed to be the hottest year on record.
Abby, we've been talking about MSCI China. It looks like we are on course now today to enter into that bear market if things end the way they are after this session. But you're still seeing, when it comes to some of these optical stocks, for example, in China, some of them like Yangtze Optical is up some 20% here today. That bifurcation that you're seeing across, tech continues. Is that only going to get wider from here?
Well, it looks like that, and actually our team is writing something in that regard. So you have to divide China into two speed or two kind of Chinas, and we have been writing about this. Now this is becoming way more pronounced. So there is an index called MSCI China ASEAN Linkage Index, which looks at Chinese companies which are exporting through ASEAN or other parts of the world, and that index had outperformed MSCI China. You rightly said that it's MSCI China is entering in a bear market. It's down about 11-12% this year, but that index, which has these Chinese winners exporting to ASEAN or through ASEAN, that is up about 3-odd%. So that two-speed narrative, both on the side of economy, as shown in the macro data of May, and in the stock market, that's catching up. And this is really important because over the years, now through the entire last decade, there have been multiple major markets which have just have not been in sync with the economy. So economy might be weak, economy might be doing one thing, but markets want to rally, and they do. And then you got this AI trade. So, ignoring anything weak macro and, going in the favor of bulls. But here is China. It's now, at least the old China part of it is syncing with the economy. So, the exports, the new engines of, growth, they are getting, support from the bulls. But the old economy, the consumer discretionary part, property part, that's, that remains weak, and it's expected to remain like that. The important thing is that this new China part is shaping up pretty nicely. The AI related stocks, the optical fiber and optics related stock that you were mentioning, they are seeing gains, but a lot of these names need to become part of the main index. Otherwise, the rally would remain below MSCI China. It won't be visible in the benchmark, but there would be rally. The market cap would, in aggregate, keep increasing. There would be winners, but the winners of who are supposed to come into the index will take their time to come in.
They will, it seems. Abhishek, thank you. Abhishek Vishnu there, our senior Asia equities reporter here. And as we, of course, mark what's been going on at MSCI China, Goldman Sachs is coming out with that latest report as well. They're sticking with, of course, the A-share market here over H here when it comes to the earnings outperformance of onshore indices, they say, powered by, no surprise, shifting AI profits towards hardware. So when it comes to that earnings growth, they're now saying when it comes to 11% in second quarter for CSI 300, 20% for 2026. On the flip side, when they talk about MSCI China earnings growth, that is seen as 0% 0% in the second quarter and 8% in 2026. So certainly that continues to show, as we were talking about, this bifurcation within, of course, that AI supply chain in China, hardware versus, of course, downstream software in the offshore market as well. We got plenty more ahead. We'll continue to watch, of course, what goes on here across these Chinese markets as they reopen after that Dragon Boat Festival. Hong Kong Hang Seng now lower by about 1.5%. This is Bloomberg. In case you missed it, if you're watching some of these Dragon Boat races over the weekend, take a look at this one in Baozhong City, China here. Humanoid robots joined their human counterparts in a Dragon Boat race in Sichuan, China last Friday as the country marked the annual festival. And according to CCTV, oh my gosh, they got a poncho on, I love it. Engineers tweaked the robot's waist-powered strike to better mimic human paddlers. The race was part of a preview campaign for the 2026 World Humanoid Robot Games that's set to open in August in Beijing. I can't get enough of this. Obviously, Avril, all the time. I mean, first it was what? They were hip-hop dancing during the Spring Festival, and now they can Dragon Boat too. They seem pretty slow, though. Is it just me?
Boxing match at one point, yeah. They're taking over the sporting world.
Yeah, it certainly feels that way. I wonder, I mean, they seem to be going much slower than what I usually see in Hong Kong. Anyways, shout out to the Bloomberg team, by the way, for the Hong Kong team winning the Silver Cup race here over the weekend. But certainly, it just goes to show, right? When it comes to the AI beneficiaries, I think Cusson was just talking about that from KGI. Focus on the likes of humanoid robots. That's where the potential winners are going to be in this whole AI application stage as well, which he says, look, at this stage, investors are not willing to look long term about where the application side of things is really going to benefit. But certainly now we continue to see it's still that hardware story today, Avril.
Yeah, but against that backdrop also, you just spoke with Abi about how the other sectors, you talk about AI modeling, right? Take a look at some of the movers in the session as well. If you watch how Zhipu has been rallying, of course, they took a bit of a break on Friday, but some of the other sectors are just on the front foot. Zhipu almost 30% higher against the backdrop of this AI consumption plan, of course, coming from the Chinese. And MSCI China, take a look as well at how we are faring on that's entering that bear market territory. Lots to unpack. We'll get more in the next hour. You're watching The China Show.
Welcome back to The China Show. We come back from that holiday, and once again, we are watching very closely on whether we do end the day for MSCI China entering into that bear market. We're lower by 1.3% right now, so it looks on course for that sort of milestone here. But certainly when you continue to watch the outperformance when it comes to some of these AI names and the hardware side of things, it continues to show this divergence, right? And Goldman, that's why they're sticking with their call that A shares are going to outperform 8 shares there on when it comes to that AI hardware earnings edge and where they're seeing that, some earnings visibility here. And that's why, right, we are seeing when it comes to Hong Kong continues to struggle here today. And you watch some of these individual movers, Avril, and it continues to be that big tech that continues to weigh on Hong Kong.
Absolutely. The Tech 8, right? These are the culprits that are dragging the MSCI China into bear market territory. Maybe we see that at the close. And Alibaba, the lens through which we're watching some of these Chinese tech consumer names is how they've been spending on AI, and they've been dealt a heavy hand when it comes to whether they are able to monetize all this. Take a look at how the likes of Zhipu, Minimax, the AI model developers, opticals as well, right? Those are the stocks that are doing well today. You talk about Goldman and the call on AI hardware. I think this really informs the sort of divergence diversion or dispersion we're seeing in the markets. And you're also looking at the rest of the region in terms of that bit of risk appetite kind of seeping back into markets yet again. To be clear, they didn't really need that help. I mean, you're already seeing the memory trades doing pretty well, even in the absence of a very clear Iran peace deal. But today, the signs that we're getting from both the Iranians, the Qataris as well, that's lifting some optimism. You're looking at the MSCI Asia Pacific 0.75% higher. Bitcoin also catching a bit, Brent below 80, and this is how the rest of the region is shaping up. Really unlocks and allows investors, I think, to clear and focus onto things such as the memory trade. Remember, this week we also have Micron earnings on deck. So this peace deal and the implementation of the MOU, the positive signs coming through from these foreign players, really, I think that's lifting markets as well today, Yvonne.
Yeah, look at Taiwan coming back from that holiday, and we're up close to 2.6% here right now. So, yeah, I continue to see now. It seems like the clouds have, I guess you could say, you can say you would push them aside a little bit when it comes to geopolitics here. According to what we heard from Iran's foreign minister this morning, saying major progress has been made at talks in Switzerland towards ending the war in Lebanon. Now, Qatari and Pakistani mediators say technical talks between the U.S. and Iran will continue for the rest of the week. Let's bring our managing editor, Jill Deeses. She's been following the developments for you. It's interesting how positive it seems like some of the statements are coming through here from the weekend. What stood out to you?
Yes, that's right, Yvonne. I think in particular the fact that you've got this statement from the foreign minister is really encouraging here. That certainly, as Avril mentioned, what's boosting some optimism in markets right now. Because remember, it was just on Sunday when things seemed to be very confusing. There was some indication from Iran that talks may have been halted over some threats that they perceived from Donald Trump. So, I mean, this is quite a stark reversal from that information coming there from the Iranian foreign minister. You just had a statement up on screen a moment ago. I was reading through it earlier. He's talking about oil and petrochem exports waived. The blockade is lifted. Some frozen assets are released. So, I mean, if you're just taking that at face value, this pretty short statement coming from that foreign minister that does indicate that there's a line toward talks improving there. We also obviously had that statement from Pakistan and Qatar. They've been the mediators on all of this, saying that there is some of that progress made. I think the big question, though, is where's Donald Trump in all of this? Where's the U.S. side of this? We're still waiting for a statement to come out from the Americans. So we'll see, whether or not we've got something there that kind of, confirms the fact that this progress is being made. Remember, there's still about a 60-day negotiation process through preliminary talks. So I think, anything can really happen there. But this is some of the more encouraging lines that we've really seen in this conflict.
Yeah, Jill, you raise a good point. I think sometimes when it comes to negotiations which involve the U.S. president, it's about reading the tea leaves as well. I was just reminded how long this war has been dragging on for. How determined do both sides look to, ensure there is a durable end to this conflict, that the strait remains opened?
Well, Avril, I'll tell you what, I think, there's been some pretty palpable frustration from Trump, particularly over the last month or so. I mean, remember, this is a president who initially said when this conflict broke out at the end of February that it would take about, 4 to 5 to 6 weeks to resolve. We're obviously well past that point. So I think that at least when it comes to Trump, there is certainly that indication that he wants to get things wrapped up, particularly because he does not want oil prices to continue spiking through the U.S. midterm elections later this year. Big, sort of domestic issues, I think, to consider here. But I think, the other part of this with Trump and with Iran, I think that the other piece of this that is still kind of an open question is where Israel kind of stands in this. I mean, they weren't a part of the original peace talk negotiations here. I think that, that does continue to seem to be something that, a lot of this is going to ultimately hinge on whether or not there's sort of that end to that ongoing proxy fighting involving Lebanon. So I think we'll have to see where this ultimately goes. And again, I'm still kind of waiting for that follow-up statement from Donald Trump himself.
As are we. Jill, thank you so much for walking us through all of this. Bloomberg Managing Editor Jill Deeses. Now, for more on the outlook for the strait, let's bring in Bloomberg oil reporter Nicholas Lua. Nicholas, we're seeing Brent tripping below 80. Back again to what we saw last week, right? How are markets positioned? How are oil traders positioned?
I think it's one thing to listen to the Iranian rhetoric, but it's quite another to see how physical flows are suggesting that that rhetoric isn't as fully blown as it used to be. As we've seen over the weekend, at least 5 oil tankers have passed through the Strait of Hormuz, exited. And these are all tankers carrying in total around 8 million barrels of crude, right? And these are all ships going through the Omani route. So that's the route that the US military is claiming that it's been able to protect. And at the same time, in addition to these flows that have happened despite the weekend claims from Iran that, oh, straits were closed, we've also seen more cargoes exiting on the Iranian side. So 3 tankers with some Indian connection have appeared outside after previously signaling around the Iranian side of the waters. So I think all this shows that despite the rhetoric, there is some kind of like intent to de-escalate. And I think that's reflected in how, for the ship owners with the gumption to make the crossing, those ships are starting to pass.
And that energy supply, the shipments, you talked about India. Where else is it going to? Do we have a sense of where these super tankers are headed?
I think right now it's still pretty unclear because in a way the world is so starved of crude, right? So in a way the people who are able to pay for it, they're the ones who are getting the cargoes through. What's clear is these are the cargoes that the world is desperately waiting for, right? The Emirati cargoes, the Saudi cargoes. So these are the cargoes that are able to produce the fuels that the world is the most short of. So I'm thinking of things like diesel, thinking of things like jet fuel. So in some ways, whoever the buyer ultimately is, what we see is balances sort of calibrating towards pre-war levels. To be sure, we're not anywhere near that yet, but at least we're pointing in the right direction.
Okay, pointing in the right direction. What could go wrong, I guess, Nicholas, is my question. What should we be worried about on the horizon?
I think, Yvonne, you're right to flag that. We've already heard about the sticking points, and while there are some suggestions in the news that's moved most recently in the last half an hour or so, including from Iranian Foreign Minister Arakchi, suggesting some kind of like rapprochement is approaching, I think it doesn't change the fact that the issues dividing the US and Iranian camps are very vast, right? Again, we've not heard too much beyond preliminary positive signs that we're going to make progress on Iran's nuclear program. We've not heard too much as well beyond the claim that, okay, yes, Lebanon and the fighting in Lebanon is going to ease off. At the same time, I think, as we've already heard from Jill, the Israelis were not a party to this conversation, and as we've already seen as recently as this weekend, the Israelis were saying they were going to maintain their position in southern Lebanon, right? So I think there's a lot that threatens to blow this powder keg up again, even as people try and work towards peace.
Nicholas, thank you so much. Bloomberg oil reporter Nicholas Wulua talking us through everything to do with oil and shipping and the focus on the Strait. And you were, of course, just seeing there a map on the northern southern corridors, and that is the way in which shipping has sort of been returning to the Strait. We'll continue tracking developments related to the war and this peace, this détente that we're seeing. This is Bloomberg.
All right, in terms of your week ahead, this is what is on tap on the economic front here this week. Of course, we just had those LPRs unchanged from China here this morning. There is going to be that U.S. May core PCE inflation data. That's going to be key for the market, especially a week after the Fed. And Kevin Warsh's, of course, commentary when it comes to committing to fighting inflation, right? So that certainly is going to be one thing to watch. There's some Fed speak this week. I think Waller and Williams are going to be speaking post, of course, that FOMC meeting as well. Thailand has a rate decision, one to watch out for, and some inflation numbers coming out from Tokyo, Australia as well. But yeah, let's not forget Tuesday. That's a big one. We got the WEF in Dalian. Also, MSCI review. This is when it comes to the reclassification of what we could see potentially South Korea and Indonesia. That could be due on Tuesday as well. Joining us now is Johanna, Chua, head of emerging market economics at Citigroup Global Markets. It's great to have you all, as always, here.
Hi, Yvonne.
It seems like energy at least is cooling off here. The risk premium has lowered. Oil's back below 80. But central banks continue to seem a bit more hawkish Does that bring in new risks, do you think?
Well, I think there are these two opposing cross currents, right? Absolutely. I think we should have a reduced inflation risk premium on the back of the sharp move in oil prices. And actually, Citi, we had major revisions in our oil price forecast, assuming that this deal really holds, notwithstanding the recent noise. But you're absolutely right. We're also having another regime shift, which is the fact that Kevin Warsh is now in town. Prior to the Fed policy meeting, there was a lot of anticipation because of the political nature of his appointment that he might kind of hint dovish. But in the end, I think it showed that Kevin Warsh was not pre-committed to a view. And in fact, if anything, it was surprisingly hawkish in terms of its dot plots, 9 out of 18 calling for hikes. And again, talking about price stability, emphasizing price stability. So I think this cross currents is kind of what is kind of factoring in. And I think when we look at the outlook around monetary policy and what it means, we kind of really have to see which is weighing more than the other. So I think last week we had 3 hikes, all of them. I mean, Indonesia was a bit that, we were actually thinking they would pause, but the other 2, it was widely expected that they would hike. But I think going forward, it kind of varies. I mean, our view is that for some of these net energy importer economies in Asia, that certainly, especially the ones that really pass through the energy price, it's quite, fluid, then you could see a reversal. So there is room, although we still expect 2 hikes out of the Philippines. I think the bias of risk, if this energy price decline continues, which is our expectation, that it could remove some of the hawkishness bias. Now, having said that, we still have Super El Nino, which we need to watch out of as a risk. Yeah. But for the other markets, I mean, for example, in the case of Indonesia, obviously they hiked, 100 basis points now. Part of the reason why they were hawkish had a lot to do with FX market pressure. Yeah. It's less about inflation. Now the question is, with what's happened with the Fed and what's happened with a bit of resurgence of the dollar, is this sustained or not? I mean, at this point, we're not expecting a dramatic, we're not even expecting a Fed hikes. But clearly that also could constrain a little bit, the BI's room for maneuver. And remember, Indonesia, unlike Philippines, did not really pass through the fuel price. So there's a different dynamic there. But again, I think different markets have different stories. I mean, Japan, we just had some comments out of the BOJ deputy governor, which was surprisingly hawkish. This is another country that didn't really pass through fully the fuel energy price shock. And when you have a more hawkish Fed and a stronger dollar, I mean, that could obviously raise some risks on the potential path of monetary policy.
So even if, once we do see the Strait of Hormuz reopen, which it seems like there's some indications that early signs of it right now, it's beyond an inflation story. It seems like global growth could come back in a big way. We're seeing already U.S. data has been so resilient as well. So can the Fed actually, do you think, still afford to hold for the rest of the year?
Well, again, people have very, very conflicting views. And as you know, and obviously Kevin Warsh was non-committal. It's going to be very, very data dependent. Now, Citi's house view is a little bit more benign, a little bit more dovish, thinking that a lot of these inflationary pressures, momentum will kind of dissipate, especially now with oil prices coming off, as well as the view that labor market will also weaken, and that could lean towards a dovish bias. But again, clearly that's not really showing up in the data. Atlanta GDP now still has growth forecast of 3%. So on a day-to-day basis, and the next key data to watch out for is the payroll number, we probably still will lean on to sort of a risk of market continuing to reprice. So look, I think the path of least resistance is probably to do nothing for now. If anything, all of this, any kind of clarity on next policy move will be to delay the moves. But again, it depending on data. And then again, as I said, the path and the spillover to central banks will also depend on what they're watching for in terms of the key driver of monetary policy. So for example, on the opposite extreme, Korea, we were calling for 4 hikes, but the Korea hike really had less to do with Iran or oil prices.
On AI.
It's just the output gap is positive. You've got financial exuberance. And now that you have an Iran deal, that probably is going to carry on further. So that doesn't really change anything, right? But meanwhile, just to give you an opposite story, the one country where we changed our central bank call right away was actually India. We used to have 2 hikes, and now we said no hike. Okay. And part of the reason why is because this reduction in oil price forecast expectation is going to reduce a lot of the pressure in the current account. So the current account deficit is going to shrink from 2 to 0.9%. And then meanwhile, they also announced a lot of capital flow measures, which I think should stabilize the BOP. And we do think, even though they didn't fully pass through the fuel price, they did pass through some. And some of the inflationary pressures from petrochemical and other kind of related derivative products could also ease. And that's why we're saying maybe RBI won't have to hike from here. So you see, very opposing narratives. So we really need to distinguish which country is hiking for what reason.
Yeah, very nuanced across the EM complex. I want to bring it back to Indonesia, because you mentioned it was the insurance hikes that we've seen.
Yes.
the MSCI is going to be at least making their decision here on whether Indonesia needs to be downgraded or maintain that emerging market status. What do you mean? If they actually avoid being downgraded, do you think that takes away a lot of the risks?
Well, that certainly provides a relief.
Yeah.
But I wouldn't say they're completely out of the woods.
Yeah.
Now, having said that, this energy price decline will help a little bit on the current account. But as you know, the big driver of Indonesia is really the capital flow story. I think one of the things that we're a little bit more constructive on is the fact that prior to this whole Iran deal news, there was already movement in India to basically allow bond yields, long end bond yields to move up. Part of what was really suffering in terms of capital inflow is they were intervening a lot in the bond market, not allowing, price discovery. The fact that you allow more price discovery and bond yields moving up, hopefully that will equilibrate capital flows. But the story is not as clear as the India story, where there was really a lot of new measures from a previous kind of restrictive capital account stand. In Indonesia, it's very sentiment driven. Even though, they're allowing bond yields to move up to hopefully attract capital flows, it's a pretty open capital account. So markets can move quite quickly as well. So I think BI cannot really relax at this point, although now, they have hiked 100 basis points. At the moment, we have a pause. But clearly, they're going to have to watch how the global external environment unfolds in terms of risk appetite for capital flows.
Yeah, so far, monetary seems to be the one lifting a lot of it. But what are you looking for more from the government itself? Are we expecting the fiscal side of things to actually?
Well, I think obviously the market wants to have some confidence about restraint on fiscal. Now it's good that we have oil price coming off. Will help at least on the subsidy bill. Yeah. But I think there was news over the weekend that I think today there's supposed to be announcement of 20 new measures on support measures for households. Then the question is, because the government tends to have a little bit more of a populist kind of pro-growth bias, that does, obviously have some impact in terms of how people want to factor in kind of risk premium on bonds. So, again, there's always a price for everything. If you allow a clearing mechanism, that should attract capital flow. But we need to watch this space very closely.
I was going to get your take on China because we heard some interesting news from Liu Jiazhui, from the PBOC governor, about really hinting at a shift when it comes to that overnight reverse repo rate as maybe the new framework. Do you see that as a shift to be more aligned with the Fed?
Certainly the fact that they've narrowed the corridor. Yeah. And then if anything, we move from plus 50, minus 20 to like symmetric plus minus 25. To the extent that, if we're in the easing liquidity bias and we're on the lower end of the corridor, it's kind of a tacitly 5 basis points reduction on the rates. But I think it's good. It does suggest that they obviously want to manage the volatility of the 7-day repo and where the policy rate is guiding us. But again, I think the bigger story, the bigger picture in China is that we still have a very two-tiered economy where domestic demand is very weak. I really don't think monetary policy is the main policy tool that you need. It needs to be more fiscal policy. Now, the big debate right now is the economic condition weak enough to push for more fiscal stimulus going into July Politburo meeting. And frankly, at this point, I would say probably not yet, because exports are still doing fairly well. I mean, we had 2 consecutive months. And to the extent that we have this Iran deal, supposedly assuming it holds, I think part of the weakness of domestic demand in 2Q may have also been exacerbated by the uncertainty on the Middle East and the Iran war, which was pushing a lot of cost-push inflation. So in a way, external environment does provide a bit of relief on China, not to mention the global AI capex boom, boosting exports. So that's why I don't really see at this point an urgency for them to do something. So I see this policy rate corridor is really kind of just a refinement, maybe tacitly a little bit lower rate by maybe 5 basis points. But again, it's really fiscal policy, which is a major factor that we need to watch for.
How are you watching the jobs market? I mean, people talk about AI displacing jobs. I think it's quite interesting in China how that could play out as well, given youth unemployment has already been quite high as well. But in terms of just prolonging the consumption malaise that we're seeing here, do you think AI could really prolong this much further, what we're seeing?
Well, I mean, again, it really depends. I think there's obviously some concerns about AI being either a substitute or a complement, and there's a worry that it could be a substitute. A part of the job problem in China could be also a skill mismatch, that you gear towards certain types of jobs, but this technology is pushing you in another dimension, and that's obviously a big challenge. So I do think that, at the moment, without additional consumption stimulus, broad-based social welfare reform, it's hard to see a big turnaround here on on the consumer market and the sentiment. And of course, the AI is kind of feeding into anxiety, especially when you have a top-down directive that wants to really push diffusion. But maybe, some of this may be over anxiety because, again, it's a question of how fast can AI really disrupt the job market. You would think it should disrupt job markets in places where labor costs is really a lot higher than in places where costs are lower.
Johanna, it's always good to have you. Johanna Chua there, head of emerging market economics at Citigroup Global Markets. A look at how Asian markets are doing as we head to this break here right now. Hang Seng continues to see a bit of pain here this morning. We're down close to 1.5%, and we're watching very closely now the MSCI China looks on set to really enter into that bear market today. Onshore markets are still doing okay. CSI 300 is up about 0.6%. North Asia, take a look at Nikkei. Kospi still doing well. This is Bloomberg. All right, we're flashing some lines here right now when it comes to the Chinese Vice Premier Ding Xuexiang. He's been speaking at a supply chain expo this morning, and he's been talking about some countries' use of export controls. Also talking about China as an anchor of stability and a propeller of the global economy. So just some lines crossing here this morning, and the risk of a fragmented supply chain, he says, is growing. We're watching very closely, of course, some stocks in particular here on the topic when it comes to exports and the like. Indium stock. So this is what I'm learning a little bit more about this. It's a soft type of metal, one of the softest types that's been used in supply chains that make electronics and touchscreens and the like. They are rising on this report of some possible tightened export checks. That's why you are seeing some of these moving quite high, a little bit up here this morning onshore. EV stocks are also in focus here. So there has been some reports, according to this EU hybrid cars tariff report, that BYD has been leading the China EV stocks lower here on this, of course, report here. So there you go. You're seeing BYD down some 4% or so. Xpeng is also seeing some pretty similar declines here across the board on this tariff report from the EU. Also watching when it comes to China e-commerce stocks as well. So there was an interesting move from Citi saying that when it comes to new Labubu toys, it's drawing mixed reviews. So that's what we're seeing when it comes to e-commerce stocks also declining. Citi seeing pretty muted 18 sales as well. So that's why you are seeing the likes of Baba down some 3% here today. PopMart is also slightly lower, but the consumption side of things not looking too strong across China there today. We're also watching some of these LG stocks. In particular here, executives there to visit NVIDIA's headquarters to discuss physical AI. That's according to some local reports there. So LG Electronics up some 11.5%. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment here. We're still seeing some pretty decent upside here when it comes to equities here. Nikkei 225 is up close to 2%. Topics is also up 1.3% here today. And we actually are on course for one of the best quarters, I believe, in about 6 years when it comes to global stocks here as well. So the tech trade certainly continues to power through for another day here on this Monday morning. And look at dollar yen. We're back above 161 levels here once again. So certainly that's one thing to watch. We're also focusing on some of the lines that are crossing here from the Prime Minister Takaichi, talking about a consumption tax will return after a 2-year cut period. So that could be quite interesting when it comes to that side of the trade there. So certainly we're watching that very closely. We're also, talking a little bit more about dollar yen, right? That continues to be that story here and what to do after the BOJ did hike. After the Fed leaned a little more hawkish, and we're still talking about a dollar yen trade that's around 161 levels here. Asian markets are doing this right now. U.S. futures are still in the red, but then again, we're seeing quite a bit of green when it comes to some of the North Asian markets here. Taiwan's coming back from that holiday here and catching up. Their Kospi, Nikkei doing well. China's obviously the other side of the coin here. We're taking a look at MSCI China. Now on pace to enter into that bear market if things continue the way that they are right now. We're flat when it comes to slightly flat. I would say slightly higher here when it comes to the U.S. dollar. But really, you see the very left box on the first column there, 2.5% up is Infotech. So there goes where preferences are here when it comes to Asia. Of course, we're tracking a little bit more about what's going on with the UK. Obviously, we've been hearing here when it comes to Keir Starmer's future could be in question here and on the brink of resignation. There's a plan that could be expected imminently, according to our sources. Let's bring in our chief Asia correspondent, Rosalind Matheson, with the latest on this. Ros, what do we know at this point?
Well, the pressure is really rising on Keir Starmer at this point. We know that he spent the weekend talking to a lot of his senior party members, having conversations huddled in rooms about his future and really the extent of the victory that we saw from Andy Burnham in the by-election last week. Just the pace of his victory has really started to inform those conversations. So the expectation is now that Keir Starmer will make some kind of announcement within a matter of hours, Monday morning, UK time. That will be some sort of announcement about his future. It may be that he announces a pathway towards him stepping down. His inclination going into this by-election had been to fight on no matter the outcome. But again, that seems to be shifting in the days that have followed that by-election. So will he announce he's stepping down straight away? Will he announce he will step down after a certain period, maybe a matter of months? That would allow Labor to organise who's going to replace him and in what parameters. But it does seem as though the pressure internally is leading Keir Starmer towards that point where the feeling is some kind of orderly exit versus a very combative leadership contest might be the way, at least for Labor, to try and reset and try and avoid some of the leadership chaos that we've seen previously post-Brexit, with the Tory government cycling through leader after leader after leader and trying to avoid that period again of chaos. But we'll have to see what comes from the announcement this morning from Keir Starmer.
Yeah, we're talking about the pound pretty soon with Ruth Carson in Singapore, and just really talking about, I think we're talking about fresh lows when it comes to sterling here. And investors are still kind of wondering what direction the British government is going to go with the potential Andy Burnham here taking over as prime minister. How do investors look at him, Ross?
Well, that's the tricky thing, because is this going to be, if Keir Starmer does indeed step aside, will it be a coronation of Andy Burnham, or will there still be some kind of leadership contest? And there we'll have to see Andy Burnham really flesh out his thoughts on policy, on who his bench might be, because again, big questions. Who would be his Chancellor of the Exchequer? He would have to navigate a lot of factional dynamics within the Labor Party. So you've got big figures on the left who want to spend more. And Andy Burnham's traditionally been in that camp. He's been quite careful in recent months to try and shift himself away from those narratives and to say he would also, create fiscal discipline. He would hold true to those fiscal goals that the current government has, trying to reassure markets, and particularly the gilt market, that he would do that. But his tendencies are still there, and he might face some pressure to spend. And so there's going to be real questions about what kind of policy objectives he would have if he becomes prime minister, and can he navigate all those factional dynamics to hold the line fiscally. And that's what markets are watching very closely.
Thank Rosalind Matheson there, our chief Asia correspondent with the latest when it comes to UK politics. Let's get to our chief correspondent FX and rates in Asia, Ruth Carson, joining us from Singapore with more on this, right? We talked about the pound in focus today, along with gilts, as we hear about this maybe possible path to resignation for Prime Minister Keir Starmer. Do you think the pound is at risk of short selling here as these political risks percolate?
Yeah, absolutely. I think Ross really captured the mood in UK politics right now in terms of, all the different factions out there. And obviously the key question as well, what's happening on the fiscal side? This is dominating investors' view at the moment. Do you sell the pound further? Do you send it to fresh lows? And do you sell gilts as well? Is that the easier expression here when it comes to worries around politics and obviously the fiscal side? Now, if we look at FXFM, Go on the terminal is a wonderful function. It shows you what FX traders, options traders are actually thinking about the direction of the pound. And there's a more than 60% chance that, the pound could potentially trade around the 130 mark against the dollar, over the coming months. So that shows you that pressure there as investors question the fiscal path for the UK under a potential, Burnham government.
Okay, that's one thing to watch. What about the yen? I mean, we're at 161 levels here right now, Ruth. How real do you think this intervention risk here is for the currency? And does Japan's currency risk falling much further from here?
Yeah, and again, as soon as the Asia bell sort of starts on the trading day, all eyes on the yen. And yes, at 161, you have to question, did authorities in Japan really spend all those billions of dollars to prop up the currency only to see it evaporate? And Japan's currency heading towards 1986 lows. I mean, look, the market is out with its judgment, right? The BOJ hiked, it is not enough. At the same time, you've got rate differentials now really weighing once again on the yen. Treasury yields are higher today. And we all know that really plays into, do you want to own Japanese assets as well as a debate? So, is intervention risk real? Absolutely. I still remember August 2024 when the yen carry trade imploded and the yen snapped back. Now, intervention risks, absolutely real. The question is just how effective it would be.
Yeah, and brings to the other side of the equation, which is the dollar, right? I see stocks are up now, yields are up now, dollar is up. It seems like the correlations are going positive again. What do you think has driven this sort of move in the dollar? Is it haven demand or what else?
It's all of the above, Yvonne, and probably more. I mean, oil is rising. We know the petrodollar story is real still. And yes, you've got Fed hike bets as well that's priced into the curve. So there's a lot of reason to sort of flock to the high yielding greenback in this environment. And yes, when there are tensions in Iran, when there are political uncertainties in the UK, when there are rate differentials weighing on the yen, you go to the world's ultimate haven, which is the dollar, undisputedly. So absolutely, there is dollar demand right now. The question is, has it run too far?
Ruth, thank you. Ruth Carson there, our chief correspondent for FX and rates in Asia, checking all things G10 here this morning. We're continuing to check oil prices right now. We take a look at how Brent and WTI are faring. Continue to see more downside here. We're on those session lows when it comes to Brent markets. We're lower by 2% and now below $79, $75 for WTI. This is Bloomberg. All right, we are checking when it comes to the AI trade in China here today. You continue to see the likes of Zhipu and Minimax doing quite well, both of which are up 16%, which is interesting because the two have actually been diverging, with Zhipu outperforming up until today. So certainly that's going to be one thing to continue to watch out for. There was, of course, last week, there's some sort of the AI consumption sort of plan. There was some talk of subsidies and the like into that sector. So maybe that's what's really pushing some of these AI stocks to continue higher here today. SMIC is also up some 3% here. For more, let's bring in our senior industry analyst, Robert Lee. I want to start with Zhipu because this stock has basically just gone gangbusters. It's been basically just gone vertical the last couple of sessions here. But about this new language model, what do you make of it first and foremost?
Okay, so this launched over the last couple of weeks. This is GLM 5.2, and on some international benchmarks, it ranked top in terms of its agentic coding abilities. So I think that's what catalyzed the excitement, and we've had some broker upgrades, etc., pushing price targets up. But taking a step back from all of that, and obviously there's a lot of retail money going into these smaller names at the moment, since this company IPO'd in January, consensus estimates in terms of their operating loss have been widened by 70%. And this reinforces or confirms a key point we're making, that agentic AI use, which they are well geared into, is actually going to widen their operating losses because it is a loss-leading product at the moment. So based on consensus numbers, this company is going to lose between $600 and $700 million US this year. That loss will actually widen into 2027. So there seems to be quite a disconnect between the stock price performance and the fundamental outlook for the company, which based on consensus numbers has actually worsened.
Yeah. But it's interesting. How good is the actual product, though? Because I think there's some reports out there that are saying that it's comparable to even U.S. frontier tech in some ways.
Well, we put out a separate note today which is looking at the data from May, and the performance premium that enjoyed by US models is typically 10 to 15% most months. That actually narrowed to about 9% in May, which is quite something. The leading model in May was Alibaba. So, but again, if you look at these ranking tables as we do consistently, they're very, very volatile, and you've got one company leapfrogging the next literally from week to week or almost day to day. There are so many new models coming out. So I suppose at least it shows the high quality of Chinese developers, the high quality of their models, but in a market which is incredibly fragmented. At the last count, there are around 900 large language models in China. Wow. 900. And you think when ChatGPT first made the headlines in early 2023, you probably couldn't have named any. So this market is really flooded with supply at the moment. Yes, the gap is narrowing in terms of technological leadership for the US, but again, monetization and the commercial outlook remains significantly in question. Hence, you've got little companies like Zhipu, which are actually suffering widening losses going forward.
I mean, the market still continues to prefer hardware over software. Do you think that this is going to continue for the rest of the year?
Ignoring the actual numbers that these companies are or aren't delivering, that has to make sense because everything runs on chips these days, and particularly models. And also we saw unconfirmed reports or allegations that maybe some ASML EUV technology had leaked into China, which has been refuted by Chinese companies. But clearly China is pushing towards semiconductor self-sufficiency. If you remember the big technological advance that Huawei announced several weeks ago, again, backed by a lot of state support and state money, China is making really good progress on semiconductors. So absolutely, everything in this world runs on chips, from your toaster to your rice cooker, you name it. So I think chips, at least it's something hard, it's something tangible.
Your report talks about the U.S. firms to maintain that AI performance lead for now.
Yeah.
Now that we've narrowed, you say, the gap, I mean, how long do you think it would take for China to come and override the U.S. in some ways?
I think the U.S. will probably maintain, in terms of model performance, will still maintain the lead because they have unlimited access to these high-end NVIDIA chips. That's something Chinese companies cannot access. But as the performance of Chinese semiconductors continues to improve, I think that will lead to a narrowing of the gap. But I think for the time being, the next 18 months or so, the US will remain in the lead. But what is in a two-horse race between China and America? And the gap between them is narrow and fairly insignificant for most mainstream tasks.
Interesting. All right, Robert, thank you. Robert Lee there, our Bloomberg Intelligence senior industry analyst. Make sure to check out his report here today about China AI model performance to narrow that gap with the U.S. Some of the stories that we're tracking for you today: China's exports of some critical minerals to Japan remain low in May amid a political dispute. Chinese customs data show that exports of certain types of tungsten as well as some rare earths remained at zero. Now, this extended downturn follows Beijing's tightening of controls in January on items with both civilian and military applications shipped to Tokyo. Hong Kong is reportedly in talks with Chinese authorities to expand cross-border investment channels and grant mainland buyers access to local IPOs. Financial Secretary Paul Chan told the China Daily the city is proposing to lower entry thresholds for qualified investors. Separately, Chan told another China-owned outlet that regulators may allow mainland retail investors to subscribe to Hong Kong IPOs. India is reportedly seeking a competitive advantage over rival nations for rolling out a trade agreement with the U.S. The ANI agency says Commerce Minister Piyush Goyal believes that India's duties need to be lowered compared to those of competing nations. President Trump met Prime Minister Modi last week and said they were very close to a long-awaited deal. All right, coming up, we're going to be talking to the triple Olympic gold medalist, Eileen Gu. She speaks to us about her motivations in sport, life, and business. That exclusive conversation is up next. This is Bloomberg. Well, six-time Olympic skiing medalist China's Eileen Gu says she's looking at investment opportunities and potentially starting her own company. The most decorated female freestyle skier of all time spoke exclusively to Bloomberg in Hong Kong on whether she sees herself as a bridge between China and the West.
I think it's the other way around, in that I just am who I am, and then the brands that also reflect that will align with me, right? And so I am I exist in many different places. I travel a lot for training, for, different events. And so I have communities and locations that I feel very connected to all over the world. And so I think it's only natural that I have brand partnerships that reflect that, because that's just who I am.
But what makes you do what you do? I mean, what you do is extraordinary. It's also very risky. You've put yourself in a situation where you've had massive injuries, shoulder, concussion. I mean, for a mom, my God, I mean, that must be quite a terrible situation to be in. But you go back to it. What drives you?
I think it's a lot worse for my mom than it is for me. I think you're definitely right on that part. What drives me?
Is it adrenaline?
I don't think I've ever considered quitting. It's like just not even, like that's just like never even crossed my consciousness. So it's hard for me to answer that. I wish I had some kind of like punchy thing, but it's just who I am. It's what I do. And I think when you integrate, how about this? The reason I care about skiing is that it essentially synthesizes all of the values and reflects back to me those values that I judge myself by, right? And so everybody has a set of values by which they define success. And so for some people it's beauty, for some people it's influence, for some people it's wealth, all these whatever different avenues, maybe cultural impact, maybe giving back to the community. These are all different things. I define my success by how well I know myself, how hard I'm able to push my boundaries, personal growth. I care about social impact. And so all of those values that I care most about are reflected directly in skiing.
If I were to trail you for a week, what might surprise me?
How little wasted time there is. Generally speaking, nobody can trail us for a week. I say us, my mom and I. Just because you really have to love it and you really have to be invested and engaged in it, because otherwise it will kill you. Like, it is just so exhausting, and there is not one moment that goes wasted. So it's like all my meals are eaten in the car. I do all of my prep during hair and makeup. I will simultaneously do multiple interviews and media things in one day. I will squeeze in like a workout in the most random time. We have a flight almost every day. I sleep whenever I can. So like just little things where you're like, wow, I didn't realize literally every single moment is spoken for. Like how much you can pack into a 10-minute window. Something like that I think would be most surprising. It's always the little things.
When you think about the future, what's in it for Eileen Gu? People talk about perhaps, you've achieved so much, but the future could hold, the movies, business, entrepreneurship. How do you look at the future for someone who's achieved so much at the top of her game in everything that she's achieved?
I'm investing more now and growing interest in that area alongside mentors of mine, and just kind of exploring that niche a little bit more. I'd love to start a company. Those are kind of things that interest me. I'm writing a book right now. I don't really sit still for very long, but I also don't like declaring goals until I meet them. Like, if you go back, you'll never find an interview of me saying I'm going to win the Olympics. Even after I'd already won the first time, there's no interview where I'll ever say, I'm going to do this. I can only say retrospectively, this is what I have done. So yeah, I think that I'm not very good at sitting still, and that I will always find a way to fulfill my purpose. Generally speaking, my goal is to make the world a better place. And so the avenues that I take to reach that will naturally evolve with my age and my, wisdom and place in the world.
That's why she's an Olympic champion. Eileen Gu there, speaking exclusively with our Bloomberg Insight anchor, Linda Ahman. Checking markets here right now. Continue to watch when it comes to oil markets here this morning. There's cooling when it comes to crude. It continues here. We're down to about 2% when it comes to Brent. WTI is around $75 here right now. Shanghai crude continues to follow that. You watch where gold is going as well, because given just the headlines we've been seeing over the weekend from the Qataris and from the Iranian side, the foreign minister did speak in the last couple of minutes or so, talking about the positive progress that's been made in Switzerland with with those talks. We're still, though, waiting for President Trump's side of this as well. And whether, of course, those statements do align is one thing. Gold is actually slightly up, although we are seeing some of these gold miners are heading quite substantially lower here this morning. Zijin Gold is down some 6% or so. And we're watching very closely what happens when it comes to MSCI China, right? So we are already hitting that milestone, set to enter a bear market here today. The next one to watch is going to be HSCEI as well. Feeling the similar fate here as well. We are also nearing bear market territory for Chinese stocks listed in Hong Kong. We're down about 1% here right now, 7,888 levels here. The level to watch, of course, is 7,779, whether we hit that here today. When you take a look at the rest of Asia, though, it's a much different story here when it comes to what you're seeing in Korea, in Japan, in Taiwan, which coming back from that holiday here, continue to see some good gains here. And really that's lifting Asia stocks higher here. We're up about 0.9%. Certainly we've been seeing the oil price is certainly helping here as well. Also when it comes to the likes of AI, right, that continues to be an up arrow story when it comes to the hardware side of things here and really overshadowing the software side. That's why you're seeing Hang Seng continue to suffer here. Let's take a look when it comes to, of course, what else we're looking out for this week, right? So, key central banks, that's kind of out of the way, but US PCE inflation is going to be the key thing to watch. That's going to be happening as well this week, as well as that MSCI reclassification review of Indonesia, of South Korea. Key things to watch, of course. This is Bloomberg.